Good morning, we are live. Yeah, today David isn't going to be joining me because his school is out, so his kids are at home, and I'm just assuming that he's going to be busy. So I'm just going to go ahead and do some morning charting analysis. I'm just setting this up so I can send it on my Twitter. Let me figure this one out. I always mess up. I don't know why. I'm gonna try. Oh, there you go. That's amazing. I just clicked share on YouTube Studio and it basically copied everything. That's nice. I like that. Okay, that's good. I think that was a success. I also have to change. The problem with YouTube is it's so many steps and it's just not straightforward. Maybe I'm just too old. No, I'm not too old. I've got to figure it out. So yeah, Bitcoin. What's Bitcoin telling us today? It's good to have a look at the higher time frame when you're charting to just get a bit of an outlook. Usually what I do is I have a separate chart with less stuff on it just to see what's going on, just to see the candles. Let me have a look at this. Oh, I still haven't shared my link. Give me a second. Let me just share my link. And once I can share my link, I can just go straight into it. I'm going to test it live, see if it's working. Oh, I still haven't shared my link. Okay, that works. So the live stream is working. Well, that's good. Because that's the problem number one. And then problem number two is the tweet. What are the live BTC price action? What are the next Bitcoin targets? And should I go short? It's going to be a good question. I can tweet that. Once I've tweeted that, which I've just done, I don't know if the volume is low or too high or whatever, but I don't like to shout. I like to just talk. So let me see if it is, and just let me know, I guess. And looking at the higher time frame, I always like to look at the candles. You're looking at my chart. I've got these blue lines. These are basically the halving events. So that was the first halving. I should technically, and this is a 3-month chart, so they're not really relevant because it's just too far a distance to cover. So let me just call those. I've got this gap back test. I'll explain the gap back test if anyone's interested. So when you're looking at candles, there's always, like with the extensions, with the candle extensions, there's always gaps are formed, and so it always has to come back to the structure before it continues. And so you usually get these gap back tests, and sometimes it doesn't fill and sometimes it does. So for example, and every time, every candle time tries to do it, tries to fill the gaps, and you can basically see the same story on all the different time frames. That all the time frames are trying to say the same thing effectively. You have this this narrative with candle theory where ultimately every time frame describes the same idea, but in a different way. And what you're trying to do is, when you're looking at candles, it isn't just looking at the candle shape or the size or the color or the length or the position. You know, you're also looking at the distribution of candles and the way they form in relative to the other time frames within the same chart. And ultimately what you're trying to do is decipher the narrative, the story, what this chart is telling you. And fundamentally, all of the market psychology, all of the market fear and greed and volume and market selling and limit selling, all of that is compressed into candles. You can get all of that information from candles. You can. Obviously, if you have volume, that helps, because then you can also, that's added information to see how much volume was traded through that candle. And so when you're looking at this is the early time frame on Bitcoin, going all the way back through to the beginning. And right at the beginning, there was a large amount of volume, and there was no back tests. There was a lot of gaps created, and those gaps have never been filled. I'll show you. So you see this volume coming in. So in 2011, 2012, 2013, and this is a gap. So you have the high of the candle on this candle here, and usually what happens is the candles will come back to touch, and it didn't. The lowest it got to was that point, so you've created a gap. Again, at the top of this candle, usually the price will come back to test that line, to test that level. It hasn't done that, so you've created another gap. Now, most of the time, gaps will fill, but obviously this is a new asset which has a lot of interest in it, and so people were market buying and they weren't selling. So you have a lot of gaps because a lot of people still haven't sold. They just held, and the gaps are usually filled when people buy and then they sell, and then they buy again and they sell. So what this is telling you is that a lot of people at the beginning bought, never sold, they're still holding. And ultimately, if you get in, like for example, right at the beginning, you see that, what you would expect with normal candle behavior is that the candles will come back down and continue like that, because the people who had bought in the initial rise would have taken profit and sold to buy back. And we haven't experienced this on the higher time frame. Fundamentally, what that means is that if all of the people who initially bought start selling their holdings back from 2011, 2012, 2013, this price wouldn't hold. It wouldn't sustain at these high prices. Then you would fill the gaps. The price would go down, all the way down. I don't think that's going to happen, because a lot of people just aren't selling, or and then also you have a lot of market growth. But fundamentally with candle theory, the candles tell you everything, and they tell you everything you need to know. And it's just trying to find out what they're trying to say. It's like trying to decipher the story. The more you look at them, the more you look at the structure, and the more you look at the patterns, the easier it gets to understand what's being said. So if you look on the yearly time frame, you see what's happened is that actually this red candle, which is last year's candle, the 2022, didn't actually have to come below this wick here. It could have just come back to the top of that wick and that would have been fine. But what it's actually done is it's come a little bit further and it's almost come to backtest this. This, coming back to backtest this candle is better than this candle. It's the more the gap, more of the gap that fills, the better the structure will look. And what you don't want when you're coming back is to close underneath that candle, which it didn't do. So that's the last, kind of the last point of support. And actually, when you get if you were to get a close underneath this candle, then that's like a loss of, it's a loss of support. And the way candles work is that there's six regions in a candle, and all of the regions are ranges. And if I zoom in, I'll show you. Oh God, I'm getting a phone call. Hold on. Chili? Yeah. So when you're contemplating, when you're looking at candles, there are 6 regions to a candle, and the best way to describe it is to use this wide-bodied doji here. Is the best way to describe the 6 regions, and I can label them if you want. And so you have this is 1. Actually, yeah. This is 2. This is 3. This is 4. This is 5. And this is 6. So, and each region is a range, effectively. 1 and 6 are outside of the candle range, where the top of the wick becomes a support, the bottom of the wick becomes resistance. And so basically, once you're outside the candle, it's just gone. You've lost that range completely. So it could go down as far as whatever. And you have the same situation with the top of the candle. So once you lose the top, you're outside of the range. So the range is infinite, effectively. And then when you're in the inside of the candle, you have 4 ranges. You have the top part of the wick, from the wick high to the top of the body. You have the body itself, which is split into 2. And it's split at the 50% mark. And then obviously you have the bottom of the wick. And that's your 6 regions, basically. And what happens is the price will trade in the range of the previous candles that have formed before it. And so when you're looking at this doji here, and this is the monthly time frame, but they all the time frames, all the candles apply on their own time frame. You can see that this month candle closed without a wick, and so basically, well, it has got a wick, but it's so small that it's almost 0. And so you can say that that whole range was just one range, and so that actually this candle has 5, and actually it has 4. It doesn't even have 4; it has just 2, because there's no bottom wick and there's no top wick. So with this candle, the ranges are just there, just the top half of the body, the bottom of the body, anything above. So 4 ranges and below the body. So this has 4 because there's no wicks. It has 4 ranges. So if you're above this candle, you're in another range, and then you obviously, if you're within the top half, you're in another range, or the bottom half, and then below the candle. So what happens is that the next candle, the price comes all the way down, even below the 50% mark, and it closes higher. And so actually it was rejected from the body and it closed higher. So, and the price as it goes, let me zoom in. Am I going to be able to zoom in? If you zoom in and you look at how the price moves on the lower time frames, what you'll notice is that these ranges, the price will trade within these ranges until it breaks and it comes back. And so the 50% of the body is very important, because you see how the price moves and how the candles move in between these ranges. It's very clear that when it holds until it breaks, it comes back to test, and then when it comes down and comes back, then it holds again. You can see by the wicks and the way they're sitting on top of these levels that they're respected, and once they're respected, it moves. When it's not respected, then you have to wait for these levels to be respected. And once they're respected, once you get to a place where they're actually respected, where you see that, okay, now this level is now respected, then the price starts to move. But effectively, that's what candle theory is. Now, the body I don't usually split like that. I just visually see it. So when I'm looking at this like doji, I'm looking at, effectively I'm looking at 3 ranges, and then if it leaves the bottom and the top, then I'm looking for new candles. And then what you can see is that this candle closed inside the body, this one's inside the body, this one's inside the body. Now this one closes above into the wick. This one holds, and the next one continues. And you see that because it closed into the wick, because this next candle held, as soon as it took the liquidity of this previous candle, it just continued. And this happens a lot. And so when you get the price coming back, it uses these previous levels as resistance support flips. Now, you can find this everywhere in the charts, and sometimes they're more respected and more accurate. Like when you're looking at early time frame, obviously the price is very volatile, but when you're looking at a more like a current time frame, like the one we're looking at now, when you look at the monthly, for example, this monthly candle is still being formed. And so what you can see is as we traverse upwards, what we're actually doing is we're coming back into the range of all of these red candles that previously, that the price previously came down in. So it's kind of moving in synchronization with these previous ranges, these ones. And that's how it works. So as the price comes up, it's using these ranges as support resistance flips to move up or down or sideways. And then obviously these are the bodies, but you can also take the wicks as intermediaries. So for example, see, look, that whole wick, once this price got into the wick of that range, of that candle, that wick held the price. It held the price. How many months is that? Once it got in, 1, 2, 3, 4, 5, 6. For 6 months, it held the price. Just that wick of that one candle. You can see it very clearly. Just from there to there. Once the price got into there, it held the price. It back tested the lows 1, 2, 3 times, and then it left. And once it left, we haven't back tested, we've just continued. And there's no reason why we can't come back to test. That's how it works. Now, if we do come back to test, usually what will happen is the same thing. It won't just come down. It will come down in sections. And it will just follow these candle support resistance levels. And they're all based at the bodies and the wicks. So it could come to the wick, it could come to the body. You just have to use these as guides, and as it goes down, you follow the path going down to go back up, and as you go up, you follow the path going up to come back down. And that's basically the idea. And then you can zoom in, and you can see what it's doing on each time frame. And effectively what's happening is that every time frame is telling you the same thing. That's the idea. So if we were to now go back into this month, which is actually the month of interest, because it's the one that we're coming back into. So as we're moving back into this area here, we're actually moving back into the range of this candle. And so therefore what you can do is you can break that candle down and see the behavior of our current price action around the previous candle. And you can mark these levels of this candle. So this didn't have a wick underneath, but what you do have is you have this candle with a wick above. So that's in the way. So you would mark that as well, because that's a range too. And then obviously you have the 50% of this body. Now I don't usually mark that, but I do have a visual idea of where it is. But for the sake of now, I'm going to mark it. I can even call it 50%. And then as we zoom in to our current price action, what you'll notice is, so if I go back, now I'll actually label them so you can see. Top of the wick, bottom of body, top of body, top of wick. And then go to the weekly time frame and you go, oh wait a minute, look what's happening. We came into the bottom of this body, then we came up to the top of the wick, we cleared the 50%, so it didn't really hold as anything. Then we came all the way back down to the top of the wick, and now we're in this arbitrary level. We've almost come to the top of the body. It's actually been front run a little bit, but that is a level. That is, and then once we get into that top bit, we're into the top of the wick. So you can even zoom in and break it down even more. So this 50% has the 50% isn't actually a real level. It's just more of an area. Usually you're looking at the top half or the bottom half, and obviously this is trading in the top half. And the way I look at it is that if you're in the top half, then it's bullish, and if you're in the bottom half, you're bearish. And so the fact that we've been trading in the top half of the 50 of this candle on the way up is an indication of bullish. So I don't usually look at it as a level to trade, but it just gives you an idea of the behavior of the price. And so we came down under, we came back up, we came down under, we came back up. The whole action is in the top half of the 50% of that previous monthly candle, and that is bullish. But we still haven't come to the top of the body, so I definitely would expect that to show some kind of resistance, just in the same way the top of this previous wick has shown support and the bottom of the body showed resistance until it flipped. And so this will give you the ranges without even knowing about volume, without even knowing about range pools. What effectively is happening is that as the price comes into new areas, you can look back at immediately at the previous candles on the highest time frame to decipher where the levels and where the ranges are. And that helps because with bullish price action, you're expecting the price to continue going upwards. You expect it to continue traversing these levels like a ladder in steps. And the minute you start going downwards, then you start changing your bias, because A bullish behavior is for the price to claim levels from resistance into support. Bearish behavior is losing levels from support into resistance. That's just the way it is. You're not trying to trade wedges or breakouts or anything like that. You're just basically trading levels, and as you're claiming levels, your bias is bullish. As you're losing levels, your bias is bearish. It's really that simple, until you start reclaiming levels again, and your bias can change to bullish. It's very simple when it comes to candle theory and the ideas behind candle theory. So as long as we continuously claim levels, previous levels, you will buy the supports and you would sell the resistances, and that's effectively what's happening at the moment. So once you have, this is the previous monthly, but you can also break that down into weeklies. So we don't need this bottom of the body anymore. We have this top of the wick. So effectively what's happening now is, as soon as we printed this weekly white weekly candle, we created a range. The candle itself is the range, and you have sub ranges within ranges, and you can break this down into multiple, like 2 weeks. Look at this 2 week candle. It's basically saying the same thing. As soon as we printed this 2 week candle with this long wick, we created a 2 week range. That's our range. So that's the top of the wick. That's the top of the body, or the bottom of the top wick. And then you have the bottom of the body. And this bottom wick is so small that you can ignore it. And so you see the bottom of the body lines up with that monthly one, which is the previous top wick. So I'll just get rid of it. It's not important anymore. So now in the 2 week time frame, we're in this range of the wick. You can see clearly we're in the range of the wick. We're trading in that range. It went down to the 50% of this body. It was rejected, and now we're trading back above that level. And this 50% can go, because now it's very clear we're in that range. So as soon as we get to the top, we're at the top of the range. That's where we are. So as long as we are in trading underneath the top of this wick, we are in this range. That's just how it is. And now we can flip that level, that wick, into support, and continue. Or we can lose this level. So if this 2 week candle prints up here somewhere, and the next 2 week it trades down and it closes down underneath, now we're in the body. And so the idea is always the same. As long as we're claiming levels and turning them into support, we're bullish. And the minute we start losing levels and turning them into resistance, our bias starts to change to bearish. And you can break that down now on the weekly time frame, so you can see we're above the wick. We're in the wick of the 2 week candle. So when the week candle came down to close, because it closed in the wick of the 2 week candle, we're still in the wick, the price was bought up immediately. See that? Because it closed. So this is a 2 week candle. When you break it down, this week was halfway through, and it closed above the body. It closed there. It didn't close underneath it. You see that? When you zoom in, look where it closed. It literally, this week candle, I mean, the more you zoom in, it literally closed on support, literally. And so because it closed on support, you're basically buying on support. So sure, the price went down, it always does, to capture some liquidity, but the close is what matters. basically the close is what matters when you're looking at candles, how it closes and how it opens. Where it closes is where the price is at that time. So at the time of this candle close, the price was on support, so it just went down halfway into this candle wick just to capture a bit of liquidity, and then it came back up. Probably when you look at these candles, it actually, what you can see is that it came down underneath this wick, and that's like it captured the liquidity just to go back up, and it will do that quite often. So where are we now? Well, I'll tell you. We're in this wick in the 2-week time frame. The candle has 10 days to go. So we're 10 days still to go until this candle completes. So already on the 2-week candle, we are right in the high of the range, and that's pretty bullish actually, because we've got 10 days to go on this 2-week candle, and we're already trading at the high of the range. So you would expect that to happen if you wanted continuation. You've gone down, you've taken liquidity on the weekly time frame, you've closed above the 2-weekly support, and we're trading back up in the high of the range. That's what you want to see. You want to see the price in the highs, because only when the price is in the highs can you break and flip resistance into support. You can't do that if the price was in the lows, and this is why it's important to see where the price is. As long as the price is trading down here, it's not going up. It has to be in the highs before it can go up, and in the same way it has to be in the lows before it can go down. So now the price has come back into the highs, and you can apply exactly the same idea about candles. So when we break it down on the daily time frame, we obviously have this 2-week, let me label it 2-week wick, and that's basically where we are now. We're within this 2-week wick. Call it body. So we're within the wick and the body of the 2-week time frame, and we also see that on the daily time frame, there's this candle, this like wide-bodied doji. And basically, this wide-bodied doji extends the whole of this 2-week wick distance, the whole lot. So we might actually, you could actually say that this now, maybe this candle is holding the price. So anything within this candle is holding the price. This becomes your range. The whole of this candle becomes your range. It's just going to range in this candle until it breaks and turns the top of this candle into support, or it just continues ranging. It doesn't do anything. It just ranges and ranges until it figures out what it wants to do. And then in exactly the same way, what you can do is you can break down this candle. So actually I'm using the index here. So the index, it's a lot better to when you're charting to use Bybit. I'm just using the index because it's my cleanest chart. There's nothing else on it. But actually, if I was to chart, I would use Bybit. So let me have a look. And go to the 2-week. You see, it'll be a bit more accurate. Let me try here. That's your wick. Perfect. Look at that. Perfect close there. On the top. There's a wick up there. So actually, on the 2-week time frame, we're in the top of the wick. There. And that's the week time frame. These are the 2 week. So that's the 2 week. This is the wick. So we're in the week. We're in the wick of the week, the time frame at the moment. But the week candle hasn't closed. You see, this is really important. We're trading inside it, but until it closes, we're not inside of it. We've got 3 days and 12 hours to close this candle. So even though we're in the wick, we're not in the wick. It has to close. It's really important the candles, where their candles close. So as long as we haven't closed inside of the wick, we're not in the wick. We're only in the wick if we close in the wick. And so on the 2 week time frame, I mean, we're still trading in the wick. Technically, we still haven't closed. We're just trading, and that's but the good thing is that we went down and we rejected from the body. And actually, when you look at these candles, you can see that we actually traded down to this wick, and that wick held the support before the candle pushed up. So on the daily time frame, we're actually inside of this this daily candle. So all of these candles, it kind of closed out here and closed back in and closed out and closed back in. But because we have this 2 week wick, we're actually within that. So we're actually coming into the top of this wick at the moment. We're actually coming into the top of this weekly wick. When you zoom in, you can see what's happening. You see how the candles, the price comes in, out, it comes, it doesn't get in, it comes back in. Now what we have to do is we have to back test. So we haven't back tested it. This was the first attempt at getting, and we lost it. It's obviously holding, it's obviously being respected, because you see how the candles form and how they push off. This went through it, so therefore it went through it. So when you get these kind of wicks that push through levels, often what you'll notice is that the next candle will push through because the liquidity has been taken, whereas here it's perfectly respected. So if that was to do exactly the same thing, then it would probably have gone down. So we're kind of trying to get back into this top part of this weekly wick, and that's where we are now. But we're in the highs of the range, and I think what you would expect now is, let me see. Once we get into the wick, you don't really want to lose the wick. It's not going to look good. And that's always the same with any kind of price action. Once you get in, once you reclaim a level and you flip it into support, you don't want to lose it. And when you look at the daily time frame, you see that this white line is your wick, is your weekly wick. Weekly wick. So if you go to the weekly, you'll see it's the wick. That whole area is the wick. This is the wick. Look on the daily. Even though the price closed, it closed back out. It never actually closed 2 consecutive days within the wick. Yeah, that's quite important, because acceptance is a second candle within that area. So if we had a daily close in the wick and a second candle closing in the wick, then on the daily time frame, that's called acceptance. the price never got accepted into this range. And this is the first time, today is probably the first time after all of this period that we could close a daily back into this range, into the wick of the weekly time frame. So if we get another daily close, then that would be acceptance on the daily time frame. And each time frame has its own story, says its own thing. So you see on the 4-hour time frame, we did have acceptance. We had not here, so that wasn't acceptance because we closed in and we lost it immediately. This closed in and lost it immediately. This closed in and lost it immediately. This closed in, held for one candle, then lost it. So that was acceptance, but then it was rejected. But the good thing about this candle here is that is an acceptance candle. So you can trade that, you can set a long, and you have a really easy invalidation. It's basically the bottom of that candle, because the idea is, when you have invalidations on candles, that if you have acceptance, and this whole candle is acceptance, you're going to go up. You're not going to go down. So as soon as the price goes down, you see it expands, because a lot of people took longs and were stopped out immediately. That's why it did that. That's why the price went down so much, because that is acceptance on the 4-hour time frame. The price, you would expect the price to go up, but it didn't. It went down, and then all these people got stopped out immediately. Now look, again it comes in, the second candle is acceptance, but the problem is that it's away from the bottom of the range. You can't trade that. You can't trade it because it's continuation. The only way you can trade a candle is if it comes back to test. And so that's why on this back test, it held the bottom of the range, and that's why you had a bullish reversal, or the beginning of a bullish reversal, but you needed confirmation on the second candle, which didn't come, because you didn't have a confirmation of a bullish reversal. Again, the price sold off. And then you have the same story. You have exactly the same story. This, it just couldn't hold. But the idea is the same. The idea is the same. So we're trying to get back into this top part of the range. And we have to, eventually what's going to happen is, once we can get into the top part of the range, then we can make an attempt for above the range, and then for continuation. And it's just the way the price works. It will get into a higher range, and then before it can make an attempt for continuation, it has to get into the top part of the range. Now, I also use volume range pools to determine ranges, and it's based on value area. But this is just based on candle theory. I'm not even looking at the volume pool. I'm not even, because there's different ways of calculating ranges, and there's the TPO as well, which is based on time. This is based on volume, and so you see, in terms of the range, volume is giving you a different story. Even though in terms of candle theory the range is that green area, in terms of volume the range is between these two blue lines. So based on the previous range, we are at the high of the range, almost at the high. This is the high of the previous range, and that's why it's stopping there. And so this is just combining different types of ideas of range to try and figure out the bias of what the price is doing and how to trade it. But effectively the idea is always the same. You're buying on support, you're selling at resistance, and As long as you're reclaiming levels for support, the price is bullish. As long as you're losing levels of support and flipping them into resistance, the price is bearish. And so, you know, when you look at the price here, when the price comes down, is it bearish? No, because we haven't actually lost level. We haven't actually flipped key levels of support into resistance. It's just correcting before it continues. It's only when you get into like key areas like this that you can begin to see whether the price is being accepted or rejected. And effectively what's happening here is it looks like it's trying to get accepted into this top part. But and we'll see, we'll just have to see if it goes up, if it comes back. Can it consolidate here for a little bit before it pushes up? Or is it just going to go down to continue going down? Then that's effectively what will happen. Around these key levels, the price will behave in either one or two or three different ways, or it could actually do this and continue like here. It could continue. It could just continue. It can only really do one of two or three things. It could either go sideways before it goes up, go sideways before it goes down. It can either go up or it can just fall back right back down. And the fall back down idea would be like this. That's it. That's what you're looking at. You can't. What else can it do? It's not really going to do anything else, and it's going to do it all around these horizontal levels. And then what you can do is you add trend. You can add trend lines, and then you can add other support and resistance lines. Maybe, obviously, fib lines are very useful. Nothing right now because we're in the top. We're in the outer part of the range. According to this, we're in the 886. So that's actually quite bullish because we've retraced from all the way down here. We're all the way back up here. We're at the 886. That's very bullish. But even though it's bullish, we're also at the maximum risk versus reward for shorts. So if someone took a short now, just here, and just put their stop loss there, and the price came down here, they'd have the best ROI on their trade. So it's a high risk trade with the best return on investment. So if you consistently trade this exact one setup in the 886 on a retrace, and you do that a certain amount of times, then one of those trades is going to work, and then that return is going to pay for all of those missed trades. But you have to be quite consistent and methodical in that kind of setup, otherwise it won't work. So I think when it comes to the price, that there really isn't, in a shorter time frame. We're looking at the 2 hour right now. We have this weekly wick. We're trying to get back into the weekly wick. As you can see, this is the weekly time frame. This is the wick. I think we're trying to get back into the wick. So you zoom into the lower time frames, and you'll see that we're trying to get back in. Here it almost got back in and it sold off. And now we're trying to get back in again. All right. Could you trade this? Yeah, I mean, you could trade this, but everything as along right now is going to be a scalp. And obviously you're at the high of the range, so shorts are quite interesting. But the problem is, and this is the problem, we're above reclaimed levels, key levels. We're above this weekly wick level, which I've indicated here. We're in the wick. If we lose that level, by the end of the week, if we don't close above this level now, the weekly, so I mean, in theory, what could happen is the price could go up and it can come down, you know, and that's very doable. The price could always do that. It could go up and it can come down. It could do that. So you'd be looking at shorts because you've not been able to claim a key level at the highs and flip that into support. You've back tested that high, which confirms it as resistance, and you start to lose lower levels. And if the weekly, let's say by Sunday we had a close here, then when you look at the weekly candle now, you'd be looking at the weekly candle, you'd be going, oh my God, we've wicked up through the highs and we have a lower close down here. That wouldn't look bullish. You see, the reason why it wouldn't look bullish is because you've taken the liquidity off the highs and you've closed lower than a resistance level, the resistance levels in a previous range, in a lower range. And so what you're always trying to do is you're trying to forward think about candles and how candles are forming, and what candles, like on the 1 hour time frame, what that candle is going to create on the 2 hour time frame, what candle is going to create on the 4 hour time frame. And so each time frame is creating a candle on the higher time frame. So you have 2 12-hour candles will create a daily candle. So you can almost predict future candles. So right now we've closed a 12-hour candle. We're in a brand new 12-hour candle. And so we've obviously started off here at the candle open. We've gone down and we've come up. So on the daily time frame, you're saying the same thing. We've gone down and we've come up. Okay. Now, whatever happens with this 12-hour, the daily would be a combination of these two candles, of these two. But because we're already on this the first 12-hour candle, we were above a support level. Yeah. This next 12-hour, you're not expecting it to close underneath this weekly line that I've drawn. You're not expecting it to do that. So then you can kind of, in your mind, you can imagine what the daily could become. Because you know that it's gone down and it's come up, and on the 12-hour time frame, it's already closed above this level that I've indicated. So on the daily, you're thinking to yourself, okay, what kind of candle could I get? Well, if it goes nowhere and the price goes nowhere, but the 12-hour still closes above this line, then I'll probably contemplating. I'm looking at possibly a green doji. Yeah. You're imagining the future candle. What kind of candle could this be in the future based on the 12-hour price action? And as time passes, the more chance or the more probability that that's the kind of candle you're going to get. And then you can think to yourself, well, is that candle in the context of where we are now, is that an inside candle within a range? Is it a bullish continuation candle, or is it some kind of reversal candle starting to form a reversal pattern? In this context, a daily candle within this daily wick is a bullish consolidation. When you get an expansion like this, so you had an expansion, a daily expansion here. This daily expansion closed above the previous day high, which is the top of this wick. So that is already a bullish reversal or continuation from this candle here, because it closed above. So it's basically closing above the wick. The range is basically closing above the range, which means it's not respecting that line anymore. There's no respect. The bulls didn't care about that anymore. Now what you've got on this daily is you're forming the beginning of a back test of that same level on the daily time frame. Yeah, and you've already, when you zoom in, you can see on the 12-hour it's done that. When you zoom in on the 4-hour, it's done that. You see, it's done that. It's actually come in to back test that. And so on the 4-hour, that is a bullish back test. You see the other thing you can see on these candles, which is really bullish, are that the lows are getting higher. Every single, apart from that one, every single low, that's kind of like a consolidation, is getting higher. The actual lows are getting higher. That's not a low. So that's bullish too. You've got higher lows. You've got higher lows. On a daily close above a previous daily top of a wick, which is a level, you've come in to back test it on the lower time frame. And so the 2-hour doesn't give you as much information as the 4-hour. Obviously the 4-hour is a combination of all these 2-hour candles. And even though here it looks like you lose it, you reclaim it, you lose it, reclaim it, and then you finally back test it. You see this final back test here, and the price expands. This is what people were waiting for. They're just waiting for the one which actually respects that line. You see? If it respects the line, once people see that it's been respected, they buy. That's why you get that bullish expansion. And then on the 4-hour time frame, it looks like, wow, look at this. This is quite bullish because you've closed above, you're coming back into test. And on the 12-hour time frame, it's basically saying the same thing. And so you're not expecting this next daily candle now to close. So this would be bearish. This daily candle now to close underneath this level here, underneath the daily open, that would be bearish. Then you're looking at a red inverse hammer, or some kind of red doji, or some kind of red. I don't think red right now is going to look good because also of this weekly wick that I've drawn. You don't want to close underneath it now. You want to close above it. Now that we're in this top part of this range, I think now what you're looking for bullish continuation is to stay up in this top part of the range. And we're kind of getting that. So what I would like to see potentially is obviously either we continue and we turn this into support for continuation, or we take the liquidity and we just come and back test that for continuation, something like that. So what you want to see, you want to see levels flipped into support, and the only way to know if a level is flipped into support is when you get the kind of the back test. And so as you can see, this 4-hour time frame, this level, which is the top of this daily wick on the lower time frame, was tested. These are tests, but they're not great tests because it wicks through them, but you're making higher lows. This structure here, this little mini structure is a reversal with a perfect back test of that level, because you have a higher close. So effectively what you've done is you've reversed the volume on that candle. That's what's happening here. So yeah, I mean, I think if you're looking, it's looking extremely bullish. How would you long this and how would you short this? Well, shorts, I think shorting it is you're looking for some very key things. I think the whole structure is now looking really bullish. Would you short blindly? No. I think you could short it only if you capture this level and lose it again. Now, I think shorting a swing failure would be dangerous, because I think what's going to happen is the minute you break up, you might get like a mini swing failure, but then you're going to get more volume coming in. I think a lot of people are looking to add volume once we take the high. That would be a higher high, and I think that's when the volume is going to come in. As soon as we take this high, I think not only are we going to get a little short squeeze, so the shorts are going to market buy. You're obviously going to get your take profits. A lot of people will always take profits at previous highs, but then you're going to get as close as possible to this line. You're going to get volume coming in. You get volume coming in. So what you really, I think what I would want to see, rather than just blindly take the swing failure, and I think the reason why I wouldn't take a swing failure here is because we've just about to reclaim the top of the wick. Look, you see I've got these lines, this weekly wick. This is the 2 weekly level at the top of the wick. We're in that top part. You're going to short into support, and that's basically what you're going to do. And on the lowest time frame, the 1 hour time frame, you're shorting into a higher time frame support without losing it. You've just reclaimed it. Why would you short into a higher time frame support? You're basically scalping. You'd literally be scalping pennies. Yeah. What would be better for a short is to claim that level as support, range, and go nowhere, and then to lose that level, lose that key level. That's the higher time frame level. Once you lose that level, you can short the back test, and so then you're shorting the loss of a higher time frame level. That would be the short. You'd be looking for a failed auction. You wouldn't be looking to short these highs because the price can consolidate. That's bullish. You see, when the price goes above a previous high and it consolidates, that's bullish consolidation for continuation. That's what you're expecting. So the minute you have that kind of behavior and then you lose that key level, you short that because that is not expected behavior. That is a loss of that level, and then you're just shorting the back test of the higher level. That's when you short. And then you don't expect the price to come down and go up. You wouldn't expect that. That would be weird. That would look weird because you've just literally consolidated up there for a long period of time, however long that is. You've just lost the level. When you take a previous level, a previous high, and you start consolidating above it somehow, you're expecting for continuation. You're not expecting to go down, you're expecting to go up. That would make sense. And so the only kind of breakout trade that exists in this kind of scenario is to flip this level into support. And if it's really bullish, it won't even come back down. It'll go up and it'll kind of maybe flag a little bit, and then it will continue like that. And it wouldn't, you'll end up with a little bit of a gap here. It may not even come back down because you'll suddenly get an increase in volume that wants to push the price up. Now, it doesn't mean that it doesn't go up, whatever, just goes up and then just comes back down again. Doesn't mean that's not going to happen. That could easily happen. Yeah. But once you're above a previous high and you start to consolidate a little bit, you're going to expect volume to come in to push it up. So what you would want to do is as long as we can flip this high into support, you'd be looking to long that. Or if we range here a little bit, the problem I think we have now is that you have this kind of like really, you're making higher lows for the bears. I mean, it's not a problem, but look, you're making higher lows. A little bit better. See that? That's what you're making higher lows. I don't want to lose this idea. Look at this. This is nice. So by And I don't actually think this is going to continue up this line. I think if anything, this is going to get probably what's going to happen is you're going to get above this level somehow, and it's just going to go up probably, and the volume is going to come in. I think this is quite bullish. This is like, look, you're making higher lows. You're coming into this, you're reclaiming this previous level. I don't expect the price to come underneath this level here. See, that's your pivot now. Your low. You know, I'm not expecting this, because it means you've lost this line. You're back underneath this weekly wick into the body. You're just about to claim it. Why would that happen? It wouldn't happen unless, I don't know, you just don't expect that to happen. And if it did happen for some reason, I think you could short that to go down, because then it wouldn't look as good as it did before. There'd be a change in behavior. It's not, this is the behavior. Look, you're holding this trend line, you're making higher lows, you're reclaiming, you've back tested this previous stay high. The 4-hour time frame, it looks quite nice. See, you've come in, you've back tested it, you're making higher lows. If you now suddenly drop down back underneath that level, that's going to look a little weak. It's not going to look as strong as you want. Doesn't mean that it doesn't go down. Like, this is the thing, if you do go down like that, however you go down, like just maybe one candle down, and you SFP that level, doesn't mean that volume doesn't come in and just push it right back up, and this candle would be your strong candle. Then you could buy a strong candle. You always buy signs of strength and you always sell signs of weakness. But at the moment, it looks like the price is just slowly working its way up. If we could get another, like, let me see. I mean, you're buying in the highs, that's the other problem. Right, now this is where you can do a range pull and just see what the volume is. This will tell you where the volume is. Alright, so you see that? So in this whole thing, if you consider this whole thing from this SR flip here, you see there's a little SR flip here. So if you take the candles from that range, from that point all the way till now, and you'll see that this is the value. You see where the value area is. What you see now is that we're into the value area high. The point of control is at the highs, which is not bullish, it's bearish, but we are above, trailing above the point of control. So as long as we're above the point of control, we're good. So that's what I was saying, like, I'm just moving my laptop to another room. I'll be 2 minutes. I just had to move into another room because I'm not at home, and I'm kind of crashing my sister's house. She's just kicked me out of the kitchen. So I'm somewhere else. I'm in the dining room now, trying to set up while I was still streaming live to the world. Not that. Right, so I think looking at that range pool, that's pretty, you don't want to lose that. Like, that wouldn't look good. Losing levels is not bullish, it's bearish. You don't want to lose levels. And the point control is a volume level, and it's very important because it's telling you where most of the volume is in that range. On that exchange, obviously different exchanges will have different points of control based on the volume that's coming in. The one that I'm using is Bybit. Okay, I'll be back in 2 minutes. 1 second. Okay, I'm back. It looks like we're making higher lows. I mean, on this like short, this mini move up, it also looks like we've made like 5 waves. Don't know what that means in the context of what's going on here. I mean, usually the price, I mean, we are like at the top of the range, you know, like we're in the value area high. We're just above the point of control. Could you short here? You could, but where are you going to take profit? You're above key areas of support. You're in the top of this range. You are making higher lows. I think it'll be really important to lose this weekly wick. You see how the point of control is nicely landed on it. I think that's confirmation, because I had that level marked out from the weekly wick. So we're in the wick now. This is the wick of the week. Look at the weekly time frame. Go back and have a look at the weekly time frame. Yeah. We're in that wick. We're in that little wick there. It wasn't a big wick. But that's where we are. We get back into the body and back test the point of control. That would be a good short, I think. You're then breaking down to find lower prices, and I think that would be an idea. Lose this trend line, back test, and fall down. Now you could fall, you could come up and then do that. I think I would want to short the back test, the point of control, and then you have an invalidation as well, because rather than just blindly shorting now, I mean, you have a really small risk to reward, but I mean, the likelihood is that this high is going to be taken, and there's a very good chance that the price wicks up and takes that. You could take the swing failure of that, but then you're still above this trend line, looking to back test this high to continue, you know. So I don't like that idea at all. I think it'll be better for us to lose this, take this liquidity here, and then that would be like the golden pocket area into the point of control, into this weekly wick, and that would be your short there. Then you have your invalidation, and obviously your target would be the bottom of the range. And if it did come to the bottom of the range and do a fib pull from here to here, then you're also coming into the golden pocket of this whole move up. And that's the trade. I think that's the trade that I'll be looking for, is this kind of behavior. Sure, you can take the swing failure here and scalp all the way up to this point of control. That's a very viable trade too. So and you're looking at 2 potential trades, but only if it breaks down, and that one would be oh, bless me, it's cold. That would be a swing failure up to there. But the idea here is a short. These are my short ideas. And the other, as I said before, the other short idea I had would be some kind of breakup, consolidation, to fall back down, and continuation down. That doesn't look good to me, and you could short that. You short the back test of that SR flip. You have invalidation above the high, so you have another short up there. That's a failed auction. You'd have to take profit at the point of control, but you know. The thing is, if the price comes down here and kind of just doesn't get back into the value area, it could just consolidate here to continue like that. You have to be aware of that. So because you're shorting the highs and you're coming back into support, you have to take profit. It's different with this short down here because you've lost support and you're shorting the back test into resistance. This is a breakdown, losing support. There's no support except maybe liquidity levels, but really the next big support is going to be down here. It's a different kind. This is a much safer short after you've lost support. This, when you're shorting in the highs, it's a lot riskier. So I wouldn't short a swing failure because we're still above resistance. I'd be looking to short a failed auction after we've lost this trend line and then back test into the SR flip. Now, this back test, this could just break down like that and then come and back test like that. That's very possible. But that would be my short idea. So you got to look at 3 shorts, a scalp long. And then there's a breakout long as well. And I think I would be looking, unless, look, so if you were to long now, your invalidation would have to be here. No, you'd have to have a pretty wide, and there isn't really, the problem is, and this is the problem, if you long now, you could, where are you going to take profit? You'd have to take profit at the previous high, which is there, and your invalidation is bigger than your target for most of your take profit. There's no risk to reward on TP1, and it's a really bad long. Longing here is a really bad long. It'd be a lot better to back test the previous high and have an arbitrary low, like, and have a really arbitrary, you could put your stop underneath this value area high, but now your target is all the way up here, because if your trade idea of this breakout is correct and this goes up, then you have a much better risk to reward as a breakout trade, and that would be the long. This is the long you're looking at. You're basically looking for a breakout long. If you don't get it, then you could. The problem is this, and I've seen this before, where USFP comes back down, stops everyone out, just back tests the lower, and then it shoots up. So your stop, I mean, has to be pretty low. You have to take that into consideration. You have to basically, I would say, maybe underneath this point of control to be safe. You have to work that out into your calculation, because you're not expecting the price to come all the way back into the point of control after you've taken the highs. That would be weird. You'd be underneath, you're coming back into this, underneath this trend line, underneath the value area high. You don't want to risk more than 1% in this kind of trade. But the good thing about a breakout trade like this is that it could break out, and it could take another step up. So you could risk 1% here as long as your stop comes up down to this point of control. but you can make a good return on investment here as well. So it's like kind of two short ideas, a scalp long and a breakout long idea here. And then obviously if we get a short down here, you could also take the long down here as well. Trade it back up to the point of control. And that would be on a swing failure of that low here. That's also a nice trade right there. You basically got all the trades into potential trades going on here. And that's how the price is going to move. You can imagine how the price is going to move. You've got your higher time frame analysis, which are these key with this weekly wick, which we're entering now. And you've got your Fibonacci, you've got your range pools, and you're just trying to imagine how the price is going to behave now, and what you want it to do, and then how you would take it if it did something that you didn't expect. And it's basically the same idea of claiming levels as support or losing levels and turning them into resistance. And that's basically what we're looking at. Let me get that. Yeah. I'm going to take a screenshot of this and give this to David. My analysis. Maybe I need to send him the little video snippet just to this section. Make him happy. And send it to him now. That's Bitcoin. Let me put all of these into a group. Hide them. Rename trades. 21st of deck. I'm gonna hide them all. Where did that range pool go? Put that in as well. Higher time frame. If I go back to the index, I can tell you what's going on. Actually, let me get rid of all this shit. Okay, we're in a wave 1 at the moment. You're expecting like a wave 2, 3, 4, 5. My target was about 52k in this run. That's what I was aiming for. Between 48 and 52, I knew it was going to happen. It's just so painful because I'm trying to just get rid of that now. Oh, let me have a look at these fib times which I had. Oh, okay, we're coming into fib time now. This is quite interesting. Fib time is not accurate. It's an estimation. It's a guide. It's not. You can't trade fib time. It's very subjective, but you can't tell you if it's going up or down. It just means that you're expecting a change in behavior because of the time the price is being moving in a certain direction. Like it rhymes. There's a rhythm to the way the price moves with time. And then my main guide is these higher time frame channels. And obviously, let me get rid of the wave. Let me put it on the highest time frame or the higher time frame. I've got these higher time frame log channels that I think the price is looking to kind of flow around. We've obviously come into this the bottom of this really important channel that this is the bull market channel. And that was that crash. It came down, it tested, and it went up. Then we came down, it just got sold into a back test, and we lost it. And now, look at this. We're in. We're literally in. So what does that mean? It means bullish. This is bullish. It's bullish because reclaiming levels are bullish. It's always bullish to reclaim levels. Now, we haven't had a real back test of this level. And obviously as time passes, the level gets higher and higher. But there is no way, now that we've come back into this channel, that being the midpoint, there's no way that I'm expecting the price to come back down here. There's no way. I think that would look terrible. It would look really bad. But in a sense, it would look good too, because then at least if it gets back in, you've got an easy long. That would be an easy long. If it did that, that would be an easy long. Very easy. If you lose, then reclaim and back test. Oh, that's an easy long. You could, not only could you long that, you could leverage that like crazy. It's very hard to leverage something like this without like some kind of invalidation or back test on a higher time frame. But if you get something like this, when you lose it and then that's easy because you're back in the channel. You could, as soon as it crosses that, you've got your invalidation. That you wouldn't expect the price to do that. That would be an easy long with high leverage. That would be an easy long high leverage. If that was to present itself, you're going to get one crazy bullish impulse on the reclaim of that lower channel. It is possible, but the reality, and I think you have to think about the psychology here. Yeah, right now people are not really shorting. Okay, so all of this kind of movement going up, not this movement, like this one here. So this one from this level here, you had a little bit of a squeeze. That was a squeeze. Everything after this squeeze, are long, is basically FOMO. People not waiting for the dip. They know it's the bull market's coming. They know the Bitcoin is halving. They've been out of the market for too long. They can't wait anymore. They're just buying. There's a lot of accumulation. There's a lot of ETF news on the horizon. They're just like, I can't wait. That's what this is. This long candle was a squeeze candle. Getting back into this range is bullish. We haven't back tested it yet. Nothing like I mean, even though this didn't get back to, the channel hadn't formed yet, but this is a back test. It's a front run, but it's a back test. Yeah, the channel hadn't formed. Actually, it's a back test of this candle here, but this is a back test. And obviously you have another back test here, which is great. So it just goes from the bottom of this channel all the way to the top. You haven't had that yet here. And I think what you want is you want people to get bearish before you can squeeze up. Squeeze is when people are getting bearish, they start shorting like crazy. And the reason why they short is because they're covering their positions, or they just want to short because they think they're preempting Bitcoin. If Bitcoin gets up here, loses this key level, then breaks down underneath this channel, everyone's going to see that we've lost this channel again. Back test this channel. Okay. You're going to get a lot of shorts coming into this back test. That would be the place to short. And that's how you squeeze up, because that's how the shorts get stopped out. And then once you squeeze up, you're going to get people jumping in again. And that's how the price goes up. So this is a very doable, within the context of the bull market, this This is a very doable scenario. This is very possible, where we go up now, we take liquidity, we come down, we don't really hold this channel as support, it just drops underneath. What it's actually trying to do is backtest this level. It can't come underneath this channel. So this is the buy the dip moment, somewhere in March. It's going up now. April, the halving happens, one more pullback, and then push up, squeeze. I don't know. I think this is possible. I think it's unlikely because I'm almost thinking to myself, right now, the way this price action is going and the way people are FOMOing in, I don't see why we don't get up to this point here. Time-wise, that would put us in the end of January. I don't see why we just don't go up to there. Even February, that's like at $58,000. Up to the midpoint of that channel. You'd have to really squeeze through these levels to get there. It would really make people bullish. You get a lot of bulls belonging these highs, and maybe you get a failed auction, you know, like you go up and drops, you get this kind of failed auction structure, and then the price kind of comes down and it does that. Oh wait, that doesn't work because that's September. No, that's not going to work. Timing is really important too. Let's see. Where is it? That's your water. Like, I mean, the theory is that anywhere we cross into this this halving, the price would just go up. That's the theory. I mean, if we go up, drop, we go up like that. You'd be losing this channel and reclaiming it. I don't know. I don't know how likely that is. I think a lot of people are going to be looking at this channel and they'll be looking to buy that channel, the bottom of that channel. And in the context of a Bitcoin halving, that would be a good place to buy. Why would you not buy the bottom of this previous channel, which has obviously been respected? And if it goes up to the midpoint, then it's another confirmation of respect. So you would obviously then look to buy the bottom of it to go up. I think this scenario of falling underneath it is highly unlikely, just because of the context of the bull market. And you know, target wise, I mean, it's very possible, wherever we begin this blue line, that we just kind of scale up this red line here, and that red line is the previous bull market support trend line. You know, the previous one, you see the red line, it taps, it kind of holds and then loses. It's very possible that we just scale this all the way through to the end somehow. I mean, it won't be in a straight line like this, it'll be like jagged, but just to kind of scale it until it finally gets to somewhere and it just drops. I don't know if the behavior of this bull market is going to be the same as previous bull markets, and you have a lot of different factors at play at the moment, with the ETFs being one of them, and obviously the world being a bit more unstable in terms of conflict being another. I think I've been talking a lot about Bitcoin. I actually wanted to talk about some other things. When you're looking at paxgold, been trading this. I mean, following it. I mean, trading it. I mean, following it. I was on my Twitter. I was like tracking this and seeing once we had a breakdown into the value area high. This whole range. You create a value area. The minute you broke into it, it just sold off. So for the whole of 2023, Bitcoin has gained on gold by 58%. It's been better to be in Bitcoin. So I'm just chatting to this like gold maximalist, and he's so obsessed with gold. And he doesn't read charts, he doesn't understand charts. I can't explain charts to him, but when you look at this chart, it's very obvious that being in Bitcoin is better than being in gold, much better. And if this continues, you know, we still have another 36% before we start hitting major support. It's better to be in Bitcoin right now. If I hide that and look at the candles, which I love to do, this is a 3-month time frame, but you see here we lost this key wick here, or this red candle, this wick as well. We lost those 2 wicks on the previous scale, and it's not being able to close back above them. That's why we're selling off. This green candle on the 3-month time frame is your back test candle. It's acceptance under these levels. Yeah. Next kind of major level, we're into this candle now. See, we're into this one. If you draw lines, you'll see. So we're coming into support soon. There's a bit of support here, and when you look at the way the price is, the price was at this level for 4 months. This is quite an important level in terms of structure. Oh yeah, look. It corresponds with the golden pocket as well. This is actually a good place to get back into gold. This is kind of the area. But of course, how far are you going to trade this? Like, you're underneath the point of control, which is where most of the volume is. Let me see this. 10%. No, 10%. You could get a next month. This candle could I mean, we haven't closed this month yet, and I wouldn't really mind to see this month close down here, right here. And then the next month could be a green candle going right back up to the point of control to kind of do a back test of this candle here, forming like a pour, like another green candle. Maybe January the money goes back into gold. It just depends. You have to see how this candle ends. You know, if this candle closes all the way down here, like a really big expansion candle, closing underneath these lows, I mean, you've lost major levels. You've closed underneath major levels of support. The story would be different. The narrative changes. So you have to watch these candles as they form and try to see what they're telling you. Like for example, these inverse green hammers. This first one is bullish in the sense that it's in support, it's an inverse hammer. Okay, the price is bought up, the profit's been turned. This second one makes it bearish. This second one makes it bearish. You want to see the next second one to be a green close above that wick to reverse the whole volume, to reverse the red volume here. We want to see a close above that volume there. This green one had to reverse it. He had one more week, another week's attempt. And this red one here is confirmation that we're going down, because we take the liquidity, we close lower. You know, if you take the liquidity, you at the very least want to close higher to reverse. That would be a reversal pattern. But instead, you took the liquidity from these lows, you closed lower, it was immediately sold into. And you keep on looking at these candles and you start going, okay, this is what's happening in the past. So how every week or every day or every month you're trying to decipher the story of what's going on. So right now gold is falling underneath this key 618. We're coming to back test, possible continuation. This is a key level, but we haven't taken the liquidity, so I'd like to see the liquidity be taken first and see how this candle closes. The liquidity is going to be there, and you might end up seeing us kind of continuing, you know. We have to see. So at the moment it looks like it's still continuing to go down. There's no reversal at the moment on gold. I can't see any reversal on gold versus Bitcoin, so Bitcoin is still stronger. We're under these key levels here. In this candle, this whole candle, we're in the body here. When we lose the body, we can still continue to go down. We're in this daily body. We're at the bottom of it. If you're looking to long now, you like go back into gold, you'd be looking for a lower time frame reversal, some kind of lower time frame reversal. That's this green wick is quite nice. Taking the liquidity close. Oh, it doesn't close higher. Yeah, it does. It closes higher by a little bit. That's the first sign of what you want to see at the lows, but it's relatively low volume. You had high volume there and then it was sold into, but it's relatively low volume. Yeah, you've got, similar to Bitcoin actually, you've got this kind of, this trend line. You've got this key level, these key levels here. You've got these key levels. These key levels here. You could get back up to the. Could just do that. Doesn't have to go up. Realistically, you want to kind of start getting back above here. You want to start trading up there. If it starts trading up there, then this is different. This is looking different. Then you know that there's a little bit of strength. I think strength would be to get back up here. Price to get back up there. Then you can see strength. It's not far up, you know, like in the scale of things. It's only 2.7% up. Then you know that maybe gold is now looking stronger than Bitcoin. Then you'd be thinking, okay, well, gold is now stronger than Bitcoin, so I'll be looking to get back into gold, start scaling back into gold. And some of the key indicators for that kind of behavior see the frame as they go up in the time frames. If we can get like a 2-hour close above, it has to close, it has to be above this line, above this candle, because that's the width, that's the range. You have to lose the range at the top. You close into above that range, then your next target is going to be the rest of this red candle from here to here, and that's going to take you up to here. And then if you can back test this area, then you can go up more. And you basically have to close up there, and hold for continuation. That's going to be your first indication of change, would be a 2-hour close above this green wick. Until that happens, you just can't go long in this. You'd still be in Bitcoin. Alternatively, obviously, you could but these swing failures are usually always scalps. You'd scalp that, but you'd still be looking to take profit and for it to continue down, because you're making a lower low. That's the problem with swing failures. They're not strong because of the lower low. But this doesn't look strong for gold, it looks weak. Let me see USDT, I've been looking at that. So we had this triangle in the highs. Usually with these triangles, what you'll get is as soon as you form them, the price will come up to 50%, and then it drops. This is 50% of this range, from there to there, 50%. That's how you know it's going down. You know it's going down because the price is in the lows. The price is in the lows. If this was going up, the price would be in the highs. You'd have the 50% in the other way. It'd be the other way. So that's how you know. You know because of where the price is. If the price is in the lows, the chances of going down are much higher than if the prices are in the highs. And so when it comes to USDT dominance, we've got this trend line here. We're at that trend line. Look at that. But it's just poor, weak. We had this level. This was USFP. We took it. This next week candle, this green candle is your take profit, and the next one just goes up and this sells right back into it. The take profit, there was no bullish reversal because the candle closed. This candle needed to close above this red candle, even by 1/100th of a point. It just needs to close above the red. It needs to reverse the red. So this isn't a red reversal. You could get continuation, so like this could be the beginning of a reversal if the next candle was another green, like 2 greens, to still the same idea to reverse the red. And so you had an attempt, and that's what this red wick is, but it was rejected, and it didn't make a higher high, it made a lower high, and now we're back into the lows, and effectively we're back underneath, we're back at this SFP line that's very weak because we're back at the lows, and we're pretty much, this trend line isn't crazy accurate, it's just a guide, but we're pretty much back at that trend line. There's no strength here at all for US dollar compared to crypto, and we're contemplating some sort of SR flip here, but the reality is, and this is the reality, you have this really fast expansion up here. There's all these green candles, all in one after another, with no support has formed on the way up. No real back test. It was just a complete, it's like a really impulsive way up, move up. Actually, the first, we are at the last point of support right now. You see, let me get rid of that triangle now. And clean this up. That's fine. Get rid of that now. Actually, that's quite important. Keep that. Furniture's there. Get rid of that. That. It's fine. Yeah. Just get rid of these now. That was your, like, this is your SR flip now. We're at the SR flip point again. This was, as this came up and the price came back down, it didn't come as far low as here, because really that was the SR. You really wanted to come back here and flip. So the price was obviously front run. It was just pushed. So this is it's overextended, and I think because we're at the SR flip now, like there, that this line that I initially drew where it matches up with is not going to hold. It's not really true, and so I think the next target for a breakdown, which is coming, we're really close. And you know, even if over the next few months we kind of come underneath and we scale up a little bit, we're still looking to go down. We're still looking to make a lower high. Your next target is going to be this whole structure and the breakdown of that whole structure. You know, that's going to be your first realistic target. It's a bit lower than I would expect, but you never know. So then you'd be looking at something like here, this level here, this value area high of this previous range. I think that's going to be your first line of major support after we lose this last point of support for the way down. Yeah. And sure, we might kind of do this. We might just kind of go down arbitrarily, create some kind of Y-cloth distribution pattern, but still fall down. It's very possible. Just for whatever reason, we just do this, like a mini relief before we just continue. And actually what you would expect is this line that I've drawn here. You'd expect like a kind of back test of that, something like that. That would make sense. A little kind of pump on Bitcoin, a little pullback, back test the previous support, which is now resistance, for a real dump into Bitcoin or into crypto. And then your target is going to be this low here. I think it depends on how fast we approach it, because if we approach this quickly, there's actually no reason why that should hold. It will probably overshoot and it will kind of just break into it and head down for these lows. And the first major support for, even though that's arbitrarily the first major support, the reality is that I think once this starts getting down into these lows here, where you have a point of control, where you have a value area low, where you have the golden pocket of this whole range, this is a really strong area for support. And I think depending on how fast and how quickly we get there, and this is the thing, we may kind of get into that range, into that area, and then we just range for a little bit, and then then there'll be a decision as to whether we continue to go down or whether we just fall back into the previous range and pull back up again. You just can't predict that. But one thing we can almost predict is that we're losing this, that we're on the brink of losing this level where we're at now. If we fall and then come back test, and then we can really aim low, and you're looking at from USDT dominance, you're looking at minus 60% USDT dominance. So basically all of the USDT available is going to be flowing into crypto. That's basically what I'm looking at now, right now. And that would time us perfectly to September if this kind of structure played out. That would be quite nice. I'll leave that there for reference. Travel. Nothing's changed in the higher time frame. We're still looking at a Wyckoff accumulation. The volume is so low that it's very difficult to trade candles with low volume. But we've come into this point of control. We've on the daily. Yesterday we closed on top of the point of control. Now today we've just, it's like a bullish rejection from the point of control. We can update that volume, still there. See that? Just a bullish rejection from the point of control. We're trading in the highs of this range. We're still above the point. As long as we're above the point of control, that's quite bullish. The minute we start losing the point of control, and I have this arbitrarily, I have this like the lower trend line. I do see some kind of triangle forming. I have two ideas are in my mind right now. We either have some kind of like a triangle like this, like a pennant really, and we're gonna figure out what's gonna happen here. Whether we go up or whether we go down. That's one idea. The other idea I have is some kind of megaphone. But I don't know. I would have rather have, if we were doing the megaphone, I'd rather the price be up in the highs, because you'd want to flip that into support to continue. It's too low for my in my mind for this kind of idea. The price is too low. So, but I mean, look, these they do match. It only matches on MEX, you know, on Gate. It's a different story. It's like on MEX, it kind of looks like some kind of that. Remember, Head and Shoulders. On on Gate, yeah. Gate is the other high volume exchange. Nothing really, it's hard to tell. This is KuCoin. The great thing about all of these exchanges is that we're above the point of control, all of them. Every single one, we're above the point of control. So as far as I'm concerned, that's bullish. As long as you're above this range point of control, we're on support. We're on support. That's good. That's what you want to see for accumulation. We want to always be above the point of control. And on the high, this is Bybit. Actually, Bybit, we're just underneath it. But with Bybit, the price is always slightly higher. So I wouldn't necessarily use Bybit as a guide. Still, I think MEX is the best as a guide. If you look at the highest, the overall range, we're creating volume at this level. We're just underneath the range point of control. We're teetering underneath it. So we haven't actually on the daily time frame, we haven't actually closed above. So you kind of want to close above, and then you want another close. You want acceptance above that point of control. But you know, when you're looking at the candles, let me go on that one time frame because I mean it would be cleaner to see. Get rid of all this. Have a look. Yeah, I mean, look, you have a reversal pattern. You have these highs here. It came down, it reversed. That's a reversal. This is a Morningstar doji. You have a perfect 2 reds into it, a Morningstar doji, and 2 greens out of it with a close above that level. Look at that. That's nice. That's a reversal pattern, and now we're consolidating for a move up. That's the theory. That's what you're expecting now. This is a reversal. This whole structure is a reversal because really like this. Look. It's a reversal. It's like a double bottom with a higher low. And on the higher time frame, we've taken this liquidity here. It doesn't mean that we don't come back down one more time. Doesn't mean that we could do that. Actually, we would have to do this. If it was going to do that, it would have to do this. Because you want to make a high high and a high low for continuation. And then you take a, that would have to be a quick up and down and up. You don't, if we go back down there, you don't want to be there for a long time. That would be weird. I mean, if you do and then you come back up, then that's a failed auction. But I think it would be really weird for us to be trading right back down there again. I think it's weird. I think slowly but surely the sellers are losing steam. That's what I'm seeing right now. And nothing's changed there. Prop was looking to have a little bit of a reversal here, and then it's just sold back into it. That's a shame. It was looking good for a little bit earlier when I was looking at it. I kind of liked this 12-hour close above there. It was above this wick, and also we'd come all the way down here to the bottom of this range, which was quite nice, and it was kind of reversing. Right, I think the stream, there's nothing really, this is still in play. Yeah, that didn't really pan out. That was a sign of strength. This is what we're still looking for. 4 hours. Oh, it kind of did, look, almost. But maybe another pass. Alright, I'm going to stop streaming, and then I hope you had fun listening. And I'm streaming every day now, so if you're interested, ask me questions, or if you want, you can give me a chart and I'll have a look at it and tell you what I think. Thank you for tuning in. Alright, have a good day. How do I end this though? That's the question. It's hard because I have no idea how to end this. Create, go live. Where is it? Oh, there it is. YouTube is so bad. It doesn't. There, end stream.